A very welcome all of you in the today's Indian Express and the Hindu section that I'm going to cover. So today I'm covering a very important article from the Hindu where discussing about the RBI repo rate impact. So RBI has reduced the repo rate 0.5% से कम कर दिया है. That is, earlier the repo rate was 6%, now it has come to 5.5%. How will the economy benefit? Will it benefit or not? That is the question we have to ask. So we all know that repo rate is a rate at which RBI lends to the banks. So if the RBI will reduce the repo rate, automatically the lending in the economy will be cheaper because bank can also give cheaper loan. Now this aspect of RBI reducing the interest rate and the interest rate benefit reaching the common people is called monetary policy transmission. So a lot will depend that if RBI is reducing the interest rate, will bank reduce the interest rate? Well, answer is yes and no both. So let's understand that. So RBI is basically clearly betting that credit will revive the urban demand. It will revive the urban demand and stimulate small and medium enterprise investment and complement the economy. Now, so this is called monetary easing because when you reduce the repo rate, it is called monetary easing. Monetary easing, that means it is easy money policy. You are putting money in the economy by a lower interest rate. So aggressive monetary easing will revive the consumption and the investment. So we all know that economy, the demand comes in the economy from four areas: consumption, investment, government spending, and the net exports. So technically, consumption and investment are two major areas. Consumption accounts for almost 60% of India's GDP and investment accounts almost 30% of India's GDP. If both are revived, then the dynamics will change. So repo cut by 50 basis point. That means earlier the repo rate was 6% and it has come down to 5.5%. So this, and also CRR is cut by 100 basis point, which means the CRR earlier was 4%, now it has come down to 3%. So automatically this will add to the 2.5 lakh crore liquidity in the economy. So this much money will be added to the economy by December 2025. So this will create benefits for the banks because bank will have more money to lend. So money supply in the economy will increase and the interest rate will come down, and that will create more lending and more demand, and that is how economy functions. So that is a belief that once the money is easily available, people will take money at a lower interest rate, put that money, invest that money, and economy will survive. But when the easier loans are given, the money can be spent in the consumption as well as investment. So it has to be seen how the dynamics change. Now coming to the policy shift. Now when you look at the policy shift, RBI is saying that we are moving from accommodative to neutral. Now accommodative monetary policy, which means that we might reduce the interest rate, or there are chances that we'll accommodate the economy by reducing interest rate. But when we move to the neutral, it means that either now we can reduce also and increase also. So you can say the interest rates are on the lower side in terms of the repo rate. So that is a good sign. And also there is a bullishness in the economy. Bullishness means economy is anticipated to grow better, and economy might grow better. So if the economy grows better, that will create more opportunities in the future. In fact, RBI has increased the growth forecast. So growth forecast for the 26th year, 2026 is revised to 6.5%. Earlier it was 6.3%. So these are based on multiple fundamentals. One is the strong monsoon, and strong monsoon will revive the rural demand. There is a higher chance of capacity utilization of the factories, the machinery that we have. The third is stronger balance sheet of the companies. The companies are doing good profit, and higher government spending because government owners and push in the infrastructure is also a major part of the economy. So when you look at the holistic approach, there is a trend that economy is doing well. However, one area that is uncertain is the external sector. So the external sector and the global headwinds that we are looking at might impact the economy in a negative manner. So we'll have to see how the dynamics change, but internally economy is stable, and thereby we need to counter that, and that is where RBI is very bullish on that. Now coming to what RBI has to say, RBI is saying that, see, we are in an era where strong monsoon is expected to lift rural income and sentiment, but there is a problem of urban consumption and private investment which are still lukewarm or tepid. So yes, the rural economy is going to push further. Policy shift is in the line the government broader push to support micro, small and enterprise sector. So MSME are the lifeline because they create jobs, and also this is a sector which is still a weak part of the Indian economy. So we need to create jobs in the economy because India has huge population. In fact, the World Population Report has come. So India has crossed 146 crore people in the whole population. So now coming to the MSME sector, why it is important and why government is pushing it. it contributes 29% of India's GDP, the first aspect. 40% export, the second aspect, and employs over 60% of the country's workforce. Now, small, medium enterprise, micro, small, medium enterprise for both industry and the service sector will account that. In contrast, 16% of overall credit goes to this sector. So, even though it accounts 29% of GDP, the credit going to this sector is less, and here we are talking about the formal credit. Now, what is supposed to be done? Now, this sector is also vulnerable. The units are small. There are chances of banking defaults. This sector is also a sector which is globally have to compete. They have to innovate, and thereby government needs to push at multiple level. One is the credit push, money push, easy availability of credit. Second is ease of doing business. The third is technology upgradation, innovation. So this sector will require utmost push because we are here competing with countries like China, Vietnam, even the Southeast Asian economies like Malaysia, Thailand. So we have to push ourselves. Now, unlocking the bank fund, the central government is, assuring that cheaper credit will revive the economy, and it will revive the investment and complement the rural boost demand, and the economic recovery will be better. So India will grow better in the coming year, depending on that. Also, when we look at the RBI stance, it says that we are pushing growth towards the higher aspirational trajectory of 7 to 8%. So right now we are between 6 to 7%, but we need to push it to 7 to 8%. Now 1% push is huge. So if you are able to do that, we can grow. For example, right now we are growing by 6.5%, and we are expected to maintain the same trajectory. But can we move 7%? And what is supposed to be done? So the lower interest rate will definitely help the small loans or small retail businesses, because all the loans, now remember this is important, all the loans, 80% of all the loans are linked with repo rate. That means if the repo rate is less, the loan will be cheaper. So normally the interest rate, the loan interest rate are based on the external benchmark plus the spread. So this external benchmark is repo. So if the repo rate is down, so interest rate will automatically come down. Bank will decide their spread. So your loan rates जो आपके होते हैं, that is depends on the external benchmarking and the spread. So here we'll see interest rate drop almost immediately as per the trends. Typically also SME are also challenging sector because there are high risk and interest rate are usually charged on the higher side. So this sector will definitely get support, and it is believed that 50 to 60,000 crore support will be there, and that will boost investment. Now coming to the bank credit. So when you look at the bank credit rose by 11.2%, unlike the earlier one. So here 11.2%, earlier it was 15.3%, so it has to grow. And also see, the bigger firms, they have access to external funding or they have good balance sheet, but it is the smaller firm which requires support, and thereby it needs to be pushed, and CRR cut and RBI cut will definitely help this segment as per the RBI. So we'll have to see how this turns out, and economy will definitely function as per the estimation. So let's see the question, the PYQ. The economic growth of a country X will necessarily have to occur if, so the country X will grow, let's say country X is India. So it will definitely grow if there is a technical progress in the world economy. Now there is no direct correlation. So this statement, world economy will grow where, how will we know that India is growing? There is a population growth in X. Well, there is a possibility, but again, will population growth help the India's economy to grow? Well, it depends, because the population has to be skilled and educated, which is not in India's case. So definitely this is not a probable answer. There is a capital formation in X. Capital formation means investment in the assets, machinery, anything that improves the investment levels in the economy. So that will improve the growth rate. So definitely this is the answer. And the volume of the world trade grows in the world economy. It is also not directly linked. So C is the closest answer we have in the question. So that is how it has to be seen. And there is a question, the PYQ. The PYQ says that it is essential. Investment in infrastructure is essential for rapid and inclusive economic growth in the light of India's experience discussed. So India has been investing in the infrastructure in terms of Bharatmala, Sagarmala, road, port, social infrastructure in terms of education, health, sanitation, and digital infrastructure in terms of Aadhaar, UPI, right? DigiLocker. Okay, so all those things will definitely help. Broadband connection, BharatNet. So there is a holistic approach of developing infrastructure. Now, if the infrastructure is good, automatically it will create improved access to basic services. It will create more jobs. Also, improvement in the social, or educational health indicators will improve. For example, investment in education will create quality education. Health will improve the productive man force, healthier lifestyle population, and overall it will lead to growth and development. So this kind of answers have to be written in a very structured manner, and such diagrams will definitely help. So we'll have a PYQ series in which I'm going to discuss these part in detail. So thank you very much for look at the follow the video, subscribe to my channel, and be regular for preparation updates. And remember, this is one-stop solution for preparation, mentoring, and guidance approach. So be assured and be connected. God bless you. Bye.